Hello there and welcome to Scott's PC. What an interesting week that we just had. Let's get to the review. You can see right here I got about $8,671 in cash. Today is Saturday morning, November 8th, 2025. I'm up about 0.45% or 38 bucks. For the past week, down about 4.5% or $400. For the past month, down about 4% or $375. The past 3 months, down about 1.4% or $120. And if I go ahead and click all time, I'm up almost 1% or about $80. And now if we take a quick peek at my buying power, you can see it's about 21,500. Right now I have about $3,300 of cash, and I have some options collateral of $1,000 for a put option I have going, which expires in a couple weeks. So we have our full margin ready to use if we want to. And I'm fully out of the high yielded and ETF space. You can see right here, I received my last dividend from NVII a couple days ago of about $16. And that's because I sold my last 43 shares of the NVII at a profit. And here's that final sell, 43 shares at $32.84. I got about $100 total profit. I was able to sell this before all the pullbacks that we had this week, so I got lucky. I was just tired of having the NAV erosion. I'm going to focus on options income from now on, specifically puts and covered calls. But there's my last sale. I'm out of the high yield ETFs, at least for now. Which brings us what is actually in my portfolio at the moment. Just a few positions: MSTX, BBAI, and SoFi. MSTX, I was assigned 100 shares because I crashed through my put of $12. So I was assigned those 100 shares last night, or it showed up this morning. I've been running covered calls on BBAI for 2 or 3 weeks, and as well as SoFi covered calls for just this past week. And as far as options, this is what happened for the past week, just $56. Now, I know it's going to be a slow grind, but I don't have to worry about the NAV erosion. So it is what it is, but you can see just each 3 options for the week: 1 put and 2 covered calls. The first one was a put option on SoFi with a strike of 28. You can see the credit at open. I let it expire worthless, a realized profit of 100% or 20 bucks. The second one was a call on BBAI, $8 strike. Right now, BBAI is below $6, so there wasn't much premium. Opened at $5. I did roll this position to a 750 strike, which cost me $1, so 80% or just $4. And then a covered call on SoFi at the 31.50 strike. You can see my credit at open was $33. I did roll this position to next week at, I think, $31, but it only cost me $1 to roll it. A realized profit of 96%, or I collected that $32. And here are the options that I currently have open: BBAI, SoFi, and MSOX. A couple covered calls on the BBAI and SoFi, and then I have a put option on MSOX. And if we take a look at my BBAI position, you can see I have a couple hundred shares. There's my average cost of $6.83. Right now, it's down 15% or $200. That's okay because I'm running the covered calls just to collect income. And if we look at the current covered call, there's my strike price of $7.50. I've got the 2 contracts here. Expires next Friday. You can see the total return is down because I just rolled it from last week. And if this contract expires worthless, I'll keep the whole $15 of premium. And if we take just a little bit closer look at my BBAI position, you can see it's sitting at $5.68. There's my 201 shares, the average cost of $6.83. So I got that much capital invested into it. Past 3 weeks, I've been running covered calls on this position. You can see, about $50. ROI, return on investment, about 3.64%. We sneak down here, you can see I did have a put option that I got $26 for. So if you combine the puts, covered calls, $76 total in the past couple weeks or so, or about 5.5% return on my initial investment, or my total investment of $1,373. So I'm just going to keep running these covered calls, and I'll probably be doing some more puts. However, BBAI has earnings, I believe, Monday after the bell, November 10th. So we'll see what happens before I make a move on any puts. But the covered call is in motion. Again, just a small premium, 2 contracts. So I might be able to put $15 here this coming next Friday. And next up is SoFi. I am running that covered call. You can see I have 113 shares, average cost of $29.66. SoFi is sitting at $28.40 right now. You can see I'm down a little bit, about 4.25%, or I'm down $140. And here's that covered call I'm running. I dropped it from a $31.50 to a $31 strike price. When I did roll this position, SoFi was sitting in the, I think, the high 25s or low 26s. So the premium wasn't so great, but that's okay. Just 14 cents or $14. Again, it only cost me $1 to roll the other position into next week. And if this contract expires worthless by next Friday, I will collect the small premium of $14, or I'll realize that whole profit. And then my last open option is a couple contracts, a put $5 strike on NSOX. It's the only one I've been running for a month. I've been running weekly covered calls or puts. Again, this is the one just for 30 days. You can see I opened on October 21st. But anyway, I had a nice premium of $55 per contract, so a total of $110. You can see NSOX sitting at $557. And if this will expire worthless on November 21st, I believe I'll keep the whole $110 premiums. If not, I'll be assigned. So as far as realized options income, since I've started doing options, the past week, $56. The past month, $338. And then my lifetime, which falls within the last 3 months, $511. This right here, my first option was September 12th, so just about 2 months ago. So not bad considering I'm just trying to teach myself. $511 of total profit from selling or buying options, however you want to phrase that. And right here, you can see I was assigned 100 shares of MSTX because it fell below my strike, this put option that I had last week. We'll take a look at it. You can see I do have the 100 shares. There's my average cost of $11.73. $12 minus the premium. That's where you get your average cost. The total return down about 7.5% or $85. So time to run the wheel on this thing. So if we go to trade options and I want to sell a covered call on it, my first thought is probably just to do the $12 strike price to see if I can wheel out of it. You can see the premium is 30 cents, or it'd be about $30 if these do get called away next week. When I run this covered call, I'll get $27 of price appreciation plus the $30 premium. And right now it is Saturday morning. You can see the bid ask it's pretty far apart right now at 30. And then the ask is at 45. We'll see if that tightens up over Sunday night into Monday morning when the market opens. But that's probably the play I'm going to do on MSTX to see if I can wheel out of it. If not, I'll just keep running covered calls and collecting whatever premium it has. And hopefully MSTR or strategies will start pumping. I'm hoping that it hit its bottom. So let's see if it pumps. Again, my average cost is $11.73. I'm in it for the options income now, so I'm not too worried about it. You know, Friday morning, I think this was sitting in the low 9s or at least the mid 9s with that late Friday afternoon rally. It almost pumped up back to 11, so hopefully we did hit the bottom. And then for next week, back to SoFi Technologies. I am running that covered call. I'll probably run another put on SoFi just to collect that put income. Again, I'm bullish long-term on SoFi. So if we go to the options chain just for next Friday, November 14th, and I want to sell a put, you know, I had that $28 put from last week. You can see it's a really nice premium for next week, considering, you know, my position in this portfolio of 92 cents. So it'd be $92. Now, the break-even price would be close to $27. My average cost right now is like 20 in the high 29. So this would definitely lowered my overall cost basis if I would get assigned, or I can play it really safe and just go down the options chain, maybe to like a $26 strike. It does tie up $2,600 or $29 or so, or $30. So I'll see how I'm feeling on Monday morning, how I want to go. Maybe it's at the $26.50. Maybe I'm feeling bullish and do it at 29. Hoping by next Friday that it's above 29 and collect a $144 premium, because I wouldn't mind getting assigned another 100 shares, not only because I'm bullish on SoFi, but this $29 strike would lower my average cost, because you can see the break even is basically $27.50. And if you look at my position, you can see my total average cost right now is 29.66 with my 113 or so shares. So that's one put play I'll probably run for next week, maybe. I'm also looking at TSLL. If we go to the sell a put again for next Friday, November 14th, Tesla, right? I always want to try and make money off Tesla if I can. I can go way down the chain and maybe sell a couple puts, the two contracts at like the 16.5 or the $16 strike price. Tesla pulled back along with the whole market, basically. You can see TSLL is at $19. It is a leveraged ETF, so maybe a couple puts or a couple contracts at the $16 strike, hell, maybe even the 17. I've always been a little bit aggressive in doing these puts and getting a sign. And so those are the couple put options I'm exploring for next business week. Well, there you have it. Just another portfolio review. Again, trying to generate options income. I'm totally out of the high yield dividend space. I just got sick of the NAV erosion, so it is what it is, but I'm moving forward, collecting these premiums. And again, the premiums I've been collecting, I've been dumping it into SoFi. You can see I have 113 shares. I did purchase 100 shares just so I can run the covered calls. So that 13 shares basically is from the premiums that I've collected over the past 2 or 3 weeks or so because I'm bullish on SoFi. Folks, thanks for watching. And as always, I'll see you in the next video.